The current live price for Reddit Inc. RDDT is $211.90 per share, marking a significant intraday gain of 8.99% as of 3:23 p.m. Eastern Time on October 31st, 2025. That spike isn't just a technical bounce, it's a massive, market-revising reaction to their recent earnings report that absolutely smashed analyst expectations, delivering a level of profitability and user growth acceleration nobody saw coming. We're not talking about a modest beat here. We're talking about a quarter where the company didn't just turn a profit, but clocked a net income margin of 28% and hit an adjusted EBITDA margin of 40%, a goal they set at their IPO that most assumed was a long way off. This isn't the Reddit the market was priced for yesterday, and that is the critical insight we need to focus on. The general expectation surrounding Reddit stock since its public offering has been a mix of excitement over its cultural footprint, it's a content powerhouse, the internet's front page, and deep skepticism over its business model's ability to actually generate meaningful cash from that traffic. For months, the narrative has been that Reddit is a high-volume, low-yield advertising platform struggling to monetize a demanding, often ad-averse user base, coupled with the overhang of being a relatively new listing in a market where tech growth is under intense scrutiny. This prevailing belief had placed a ceiling on the stock, forcing it to trade with a significant discount compared to more established players. Earnings shockwave and intraday momentum. What we are seeing today is the market's collective, dramatic realization that this skepticism was likely overdone, or at least fundamentally mispriced the execution capabilities of the management team. The intraday market movement is a classic case of a massive short squeeze paired with institutional investors rushing to re-rate the stock. Trading volume is through the roof, hitting over 14 million shares in the intraday session, well above the stock's average, signaling a palpable shift in ownership from short-term traders to longer-term institutional holders who now see a clearer path to sustained profitability. This momentum isn't just advertising growth, though that segment did grow a massive 74% year-over-year. It's the acceleration in user adoption, specifically the 19% year-over-year jump in daily active unique users, or DAQs, to 116 million. More importantly, the international revenue growth, which grew 74%, actually outpaced the domestic U.S. growth, suggesting their global expansion and language localization efforts are working, effectively opening up new, untapped markets. For a social media company, user growth combined with a significant jump in average revenue per user, or ARPU, which they saw increase by 41% year-over-year, is the kind of one-two punch that fundamentally changes the financial model. It implies they are not only getting more users, but are also getting significantly better at selling ads to those users, a core competency that analysts doubted. The tension between expectation and reality is the stock soaring today. The market expected continued monetization struggles and modest growth. The reality is an accelerating, profitable advertising machine with a clear international growth runway. This massive re-rating is why the stock, which had seen a massive rally earlier this year, only to pull back amidst market volatility, is now threatening to take out previous highs. The swiftness of the recovery from the recent dip is highly indicative of strong underlying demand, as it suggests that any weakness is being met with immediate buying pressure from those who missed the move. The recent flurry of analyst updates reinforce this narrative. We've seen price targets raised across the board from institutions like Morgan Stanley and Truist Securities, pushing targets as high as $270 and $250 respectively. This rapid consensus shift is not just an endorsement of the last quarter, but a recalibration of the future earnings power of the company. When analysts, who tend to be conservative, move their numbers that aggressively, it is a loud signal that the underlying model is performing better than their long-term forecasts accounted for. The institutional activity around the stock has also been heating up, with a noted increase in transactional activity, likely fueled by portfolio managers trying to quickly adjust their exposure. This is not just a trade, it's a re-underwriting of the company's valuation thesis. For those engaged in self-investing or managing their own intelligent portfolio, observing this kind of institutional rush is a crucial lesson in how dramatic earning surprises can instantly compress the time horizon on a long-term investment thesis. It's a moment that reminds us why platforms like Fidelity or Interactive Brokers provide the tools to monitor such sudden volume and price changes, enabling investors to react to these surprises rather than just the stale, preconceived narratives. Business model: content, curation, and commerce. Reddit's core business is straightforward. It is a collection of user-generated communities, or subreddits, built around every conceivable topic. Unlike other social media giants, Reddit's value lies in its highly specific, interest-based communities that generate a vast, constantly updated, and searchable repository of human knowledge and opinion. This community-driven curation, driven by volunteer moderators, is its unique structural advantage. The monetization mechanism is primarily through digital advertising. Advertisers target users based on the subreddits they frequent, making the ad placements highly contextually relevant. This contextual relevance is becoming increasingly valuable in a world where broad user data tracking is facing regulatory headwinds and consumer backlash. The recent earnings suggest they've hit an inflection point in their ad tech stack, utilizing automation and machine learning to make their ad placements more efficient and better performing for advertisers, as evidenced by the comment that machine learning-driven optimizations improved lower funnel ad performance by more than 20%. The market's previous skepticism stemmed from the inherent nature of a Reddit user, often tech-savvy and quick to criticize intrusive advertising. The expectation was that high ad loads would alienate the core user base. The reality that the company is demonstrating is that they are increasing ad volume and effectiveness without sacrificing user engagement, a difficult balancing act they appear to be pulling off. The other major component of their business, which is frequently discussed as a significant future revenue stream, is their data licensing deals. Reddit's content is a massive, real-time dataset of human conversation, which is incredibly valuable for training large language models and other forms of artificial intelligence. While management has stated that the revenue from chatbots and AI partner referral traffic is currently immaterial, the future optionality from this data is immense. The recent high-profile lawsuit filed against an AI firm for alleged data scraping underscores the company's commitment to monetizing this valuable asset and protecting its intellectual property, a crucial long-term strategic move that the market had largely discounted. This move in isolation might not move the needle today, but it is a clear signal that they are serious about extracting value from their data, which is a powerful contrarian take to the previous narrative that their data was a freely available resource. Macroeconomic currents and sector momentum. The company's outstanding performance is taking place against a complex macroeconomic backdrop. While the broader market has been volatile, with concerns over interest rates and geopolitical uncertainty, the digital advertising sector, particularly for high-growth platforms, remains resilient. This strength is partly explained by the need for advertisers to find measurable, high-performing digital channels as traditional media continues to decline. Reddit is capitalizing on this shift. We've seen similar themes play out with companies like Apple stock, where a strong balance sheet and ecosystem resilience allow it to weather broader economic storms. The key for Reddit Inc. is to maintain its ad momentum while carefully managing operating expenses to continue driving the high adjusted EBITDA margins they've achieved. The fact that their operating expense growth is significantly lower than their revenue growth suggests strong operational leverage, which is what separates a good social platform from a great investable business. Comparisons to peers are inevitable, And it's here that the expectation versus reality principle shines again. Historically, Reddit traded at a steeper discount on a PE and price-to-sales basis compared to established social media companies, reflecting the market's lower growth and profitability expectations. The recent quarterly results narrow that gap dramatically. While its price-to-earnings ratio remains high, a characteristic of many high-growth tech stocks, the sheer pace of its profitability improvement justifies a significant re-rating towards peer multiples. When thinking about where to find investment help or where to invest online, this kind of rapid re-rating on a single piece of news is a powerful argument for maintaining a diversified portfolio, perhaps through a system like Schwab Intelligent Portfolios or utilizing Fidelity ETFs, which would have captured the broad market upswing that lifted the entire tech sector following better than expected